Good afternoon, everyone. Happy Friday. Happy Friday, everyone. I hope you're doing great, ready for the weekend. If you are new here, my name is Noura Al Masri. I am the enrolled agent and the founder of Noura's Books. I am known as a nonprofit CFO. Today, I want to talk to you about tax planning. I've been getting a lot of questions from clients and prospect about tax planning. When I mention tax planning to them, a lot of them have been thinking that is planning for taxes, just like gather your information, and that is what tax planning. In fact, no, it's not. It's the total different. It's another procedure. It's another thing that you don't have to do, but if you want to have a control on your finances, if you want to have a control on your money and how to spend your money, you want to consider tax planning. It's something really important and you want to consider it. Now, if we want to identify, if we want to like say what is tax planning in a few words, I I had to come up like with few um like I couldn't make it more simple than what I wrote this before. Actually, I come here live just so I can tell you just in a few words what is tax planning. It's analyzing your current tax situation to make it more favorable to you. That's in few words. It's analyzing your tax position to make it more favorable to you. Meaning, instead of just doing your taxes and having your taxes done, and okay, we tell you, okay, this is how much you owe, or this is how much you get. Um, Now you are doing that ahead of time, and you see the scenario, and then you said, okay, I owe this money. How can I control where I put my money instead of just paying that money to IRS? There are a lot of strategies over there. I'm not gonna go over the strategy in this live today. I just want to explain tax planning more. So, who is tax planning for? Tax planning is literally for everyone. Anyone can do tax planning, especially if you expect to owe in your taxes. It is more important for high earners. So if you're doing six figures or more, it is more important to do tax planning. If you are a business owner, or if you are thinking to do to start a business, then you must have tax planning. Now, it's not a requirement, but you must have for your own benefits. So, of course, it's up to you always, but you want to have tax planning to make sure you form your business in a right uh, entity election, LLC, S corp, C corp, whatever it is. I always tell people, like, when you want to start a business, you want to talk to a lawyer and an accountant because you want to see legally like what how you should form your business. So don't just go and register it anywhere. You want to go see, okay, an attorney, tell them your situation, what's your future planning, so they can advise you based on your state what's the best entity election for you in a legal point of view. And then you want to talk to an accountant who does tax strategies to see, based on your goals and your current situation and the expectation on of the business, what is the best entity formation for you. And that cannot be just an answer on a call. It cannot be. It must be based on numbers, based on a lot of analysis. And yeah, it does cost for both, like talking to an attorney and talking to an accountant, because it's not, it depends. So I know there's a lot of videos, especially on TikTok, saying and saying S corp, S corp, S corp, while S corp is a great entity election, but it doesn't mean it's good for everyone. It doesn't mean that is the best entity election for you. So you want to keep in mind that, and don't just like see what's there, who's everyone saying, or and just go for it. You want to make sure you have calculated steps when it comes to your business. Now, like I said, tax planning is for everyone. It just vary in terms of complexity. Like tax preparation, if you don't have a business, it's simpler. If you don't have kids, it's more simple. If you just have W-2s, that's easy. But the more stuff you have, it's become more complex. Same thing with tax planning. If it's simple, like you don't have so many things going on, then it's a simple tax plan. If you are a high earner, maybe have kids, maybe have some property, it's more complex now. If you have a business or want to start a business, it's more complex. So when the business generating more and more revenue, then also now it's more complex. So it varies. So there's no tax plan fits all, but it is really recommended to do tax planning. Now, when would you start a tax plan? Anytime. Anytime you can do tax planning, because we do taxes every year, right? So regardless of when you do the tax plan, you're gonna benefit from it in the current year and next year and in the future. Now, you cannot use the exact same plan every year because the situations might change, the tax law it might change, your income might change. A lot of situations can vary, so you cannot use the same tax plan for every year. However, it's not going to be, unless you have a dramatic change, like a lot of change in your life, it's going to be like small modifications. So you want to talk to your tax professional, and this is actually the best time to start thinking of it. Well, now, like you can do it any time, but this is the best time you start thinking of it. When you do your taxes, this is the time. Okay, now let me see, especially if you see you owe some taxes or you might owe next year. Okay, let me just uh, take a look and see how are my taxes gonna look like for next year. This is, like I said, it's analysis of your situation, of your tax position. So you might not know everything of what's going on today, especially if you are a business owner. Now, if you're on W-2 and that's your only income, most likely you will know unless you leave your job to another job, like nothing's gonna change much. So you can predict more in this situation. And there's also like your status has changed. Also, that's a situation where you might have different expectation. What I mean with that, if you are married, if you are single, if you have kids and you're head of household, like all of these things change your tax position. So you want to consider all of that. So it is a good time after you do your taxes to start the process of doing tax planning, so you avoid like paying taxes um, for the next year or for the current year. But I'm saying for next year because it happened a year after. But and now you still have time to save in taxes if it turns out that you're gonna pay more in taxes than when you expected. This is why you don't want to wait until the last minute, because like there are some strategies you can take advantage of until April 15. But if you don't do your taxes early enough, it's too late. So you want to make sure you take advantage of that. So another thing I want to talk about, Now, I told you already about before you starting a business. So tax planning, again, is analysis of your tax position to make it favorable for you. It is putting you under control in the driver's seats instead of just reacting to your situation and really don't have anything to do with it. Now you are on control. You know how it's going to look like. How can you avoid it? How can you allocate your money the way you want to allocate? Maybe you want to invest in your business and then reduce your tax liability. Maybe you want to invest on your retirement, your kids' retirement, your kids' education, whatever it is. Of course, not just paying for school. No, there's like another strategies, but it can be used for your kids' education. So there are a lot of strategies, like not each and every single strategy works for everyone. Every one of you is unique. So the tax plan that can come to you or can apply to you. Now, I want to just touch base about one important tax strategy, which might be an entity election. Now, entity election is, like I said earlier in this video, like it can be LLC, S corp, C corp. These are the type of entities that you might have. But if let's say you are an LLC, okay, and then you have just made a lot of money, and so in this case you might owe so much money in self-employment taxes, and all the incomes come from your LLC, considered as your income, your money, regardless if you transferred that money to your personal account or you left it in the business account. It is your money. You're going to be taxed on it. You're going to pay self-employment on it regardless. So you want to make sure to evaluate the situation and see if it's right for you to stay an LLC, or is it better for you to elect an S corp? And the reason I'm mentioning this is because S corp election deadline is March 15th. So it's coming within a little bit over 2 weeks. So you want to really know that right now, because you don't want to miss it. Like, you can file a late election. However, it's going to be up to the IRS if they approve it or not. But now, most likely, they're going to approve it. But again, don't just go and do an S election. You need to do tax planning before, even if it was like a short version of tax planning. But you want to do something to see how it's going to look like. And also for you, the business type that you have, doesn't make sense to be an S corp. Are you eligible to be an S corp? Because not everyone can be an S corp. So there's like some conditions for that. The benefit of S corp, though, you will save in self-employment taxes. Not all the income for your company will be considered as an income for you personally. So because you can take salary from an S corp, so that's become your income. So your S corp will generate K1 to you. So it's different than the LLC. Now, a lot of people confuse that. They say, okay, S corp, I don't have to pay taxes then if for what I'm getting paid for. But yes, you have to pay payroll taxes. That's the reason why you do not have to pay self-employment taxes anymore, because you should be on payroll and you are getting you are paying those payroll taxes. However, you don't have to be on payroll, but you're not going to get paid if you're not on payroll if you have an S corp. In order to get paid as an S corp owner, you want to be on payroll. You need to have a reasonable salary. That's a must. That's a must. It's not an option. You either don't get paid at all or you get a reasonable salary. Now, if you get a reasonable salary, then this is when you can take a dividend. So otherwise, you cannot take a dividend. Why? Because IRS wants to have their money, because now you're not paying self-employment taxes. However, they still want their taxes, so they want that out of payroll. So you need to make sure you are doing that. That's it. That's what I want to highlight. There's a lot more tax planning, especially if you have kids. A lot of tax planning. Actually, it depends on what's your situation. What happens is when you are starting a tax plan, we evaluate your current situation as a family, as a business, you, your spouse, your kids, everything, and then we run some scenarios, analyze your situation, and then let you know what would be the estimation of your tax liability and how can you make it better. Like, we provide some strategies and you can choose which one you want to implement or maybe not. But the thing is, you are on control. No one's control what you have to do except you. You can be reactive, you can be proactive. You can just like be forced to pay it on taxes, and you can choose where do you want to spend your money on. So the option is yours. If you want to do tax planning, feel free to connect with me. I would love to talk to you and start your tax planning. And if you already have an accountant who you would like to work with, go ahead and talk to her. It's time to actually start thinking of what you want to do for next year. And also, if there is an opportunity to do anything this year to minimize your tax liability. So again, if you have any question, please let me know. I'll be happy to talk to you about it. I'll be happy to help you with your tax planning and your tax preparation. Before I leave, I want to remind you that I'm running a promotion that when you do your taxes with me now, just very, very limited time, like when you pay in full for your taxes in advance, you get 20% off. So when you do your taxes in advance, when you do your taxes and pay in advance in full, then you get 20% off your preparation fees. Let me know if you have any question. Here's the link in the on the screens. Unless if you are on Instagram, it's going to be on the bio. So you can book a call, you can onboard yourself and start the process. Just let us know that you want to take advantage of the promotion, and we will send you the final bill so you can make sure to pay it on the time so you can take advantage of the promotion before we end it. If you have any question, please let me know. If you want me to talk about something in specific, also please let me know. Otherwise, I will see you Monday. Thank you so much for listening to me. Thank you so much for being here. I love you all and have a great weekend.